Hello and welcome to Niaga Spotlight. Me, Tamina Kausji. Niaga Spotlight goes through the week in business and future affairs. Market watch, industries, analysis, and insights. We've got you covered right here on Niaga Spotlight. Well, this week on future affairs, we're looking at Islamic finance and economics. Now, it's very interesting to note that by 2026, the global Islamic finance industry is expected to reach 6 trillion USD in value. Malaysia's strong Islamic finance ecosystem, digital transformation, and growing takaful awareness can position the country to become a global leader in Islamic finance and takaful. These, of course, were also highlighted at this week's Global Forum of Islamic Economics and Finance, GFIEF, which was themed Shaping a Resilient Global Islamic Economy Through Values-Based Reforms. Now, more recently, the potential of Islamic finance towards addressing global economic challenges via Maqasid Sharia or objectives of Sharia and transitioning towards net zero are key opportunities for a future with sustainable finance and economic justice for all. Now, millennial and Gen Z Muslims in Southeast Asia also increasingly embracing Islamic banking, with 77% of Malaysians and 65% of Indonesians surveyed using it alongside traditional banking, compared to only 35% of Muslims globally. Malaysia also boasts the highest proportion of consumers who only use Islamic banking, 42%, compared to just over a quarter, that is 26% of global respondents. With APAC representing around 25% of the global Islamic finance market, Niaga Spotlight today, we discuss strategies for Malaysia to emerge as the clear leader in the region. Professor Dr. Aishath Muneeza, who is Professor and Assistant Dean with the International Center for Education in Islamic Finance, INCEIF University Malaysia, joins me now for this conversation. Good morning, Dr. Aishath. Thanks so much for taking time to join us on Niaga Spotlight. How are you doing today?
Good morning. Thank you very much. I'm doing good. Hope you're doing well as well.
Absolutely. So, Dr. Aisha, to start off the discussion, now looking at Malaysia's large Muslim population, as well as the strong support from the government and government-linked institutions, this has really helped expand the reach of Islamic banking in the country. If we could begin perhaps by discussing the potential for Islamic finance, as well as other Sharia-compliant instruments to further expand this in Malaysia.
Thank you very much for that great question. No one can deny that Malaysia is not the hub of Islamic finance, because Malaysia is right now considered as the cranium of Islamic banking and finance in the world. Now, looking at the potential, there are still areas that we can improve. For instance, when it comes to Islamic commercial finance, we are talking about Islamic banking, takaful, Islamic capital markets. We have achieved a lot of milestones. But when it comes to serving the underserved segment of the population, what can Islamic finance do is something still we are deliberating on. And we have achieved something, but not as much as we are supposed to achieve. What I'm talking about here is the use of Islamic social finance to serve the unserved and underserved segment of the population, or to achieve financial inclusion in another way. Now, if we look at the potential of Islamic social finance instruments such as zakat, the compulsory alms, awqaf, Islamic endowment, sadaqah, charity, we believe that there is a lot of things we can do, but at the moment, the reason why we are hesitant to use that in the formal sector of economy is something we need to think about.
Absolutely. I think you make some really key points there, especially considering how well-known instruments such as zakat, sedekah already are in Malaysian society. We'll go a little bit deeper into some already existing social finance experiments that have been happening in Malaysia, some of which you've also been directly involved in. But firstly, I think that it's very interesting, before we move forward, Dr. Aisha, to perhaps going into some of the enduring misconceptions or myths, as we could say, about Islamic finance and banking that may act as a barrier for adoption to the wider public. Malaysia, of course, being a multicultural, multi-ethnic society, this is also of key concern.
Yes, definitely. For instance, the most people we have think that Islamic finance and banking should be only for Muslims, but it's not the
Mhm.
case. Anybody who wants to take such products and services, it's open for them, irrespective of the faith convictions. So I think this is the most fundamental misconception that we have to eliminate in our societies to move forward. And furthermore, even among the Muslims, of course, we understand the worship activities, or as we call it, ibadat activities more. We know that we have to perform daily prayers, do, for example, give compulsory alms. We know that religiously we have so much obligations, but when it comes to financial transactions, sometimes we fail to understand how to distinguish between riba and trade activities, because from a Sharia perspective, riba is something which is prohibited, but the alternative to riba is the trading activities or the business transactions that we have to engage in. So how to distinguish ribawi activities or riba-based activities and the trade-based activities in reality is something which is difficult for us to do. And we have this misconception that everything that gives us a profit is riba, but it's not the case. Riba is something which is very simple to understand, which is very definitive. Riba simply means that, number one, if you engage in giving a loan which is supposed to be benevolent to someone, then you cannot ask for anything more than the principal amount you've given to the debtor. So first, there should be a loan transaction, creditor-debtor relationship. The principal amount is the amount that must be returned. If an extra amount is charged in a benevolent loan contract, then that extra amount is riba. Riba doesn't mean that charging of profit in any of the trade transactions. So this is also a misconception we have. The problem in Islamic finance is not charging of the profit, but when you engage in riba. And there's another type of riba, which is riba al-fadl, when you exchange the ribawi commodities. The ribawi commodities are, for example, when you exchange gold for gold, silver for silver, barley for barley, wheat for wheat, salt for salt, dates for dates. Then only when you exchange it not on spot, or when you do it not in the same value, then that can lead to riba. So riba is something which is very specific. The problem in Islamic finance is not related to charging of profit at all. So this is also one of the misconception. And another misconception is Islamic finance and banking should be something which must be like complicated. It cannot be like conventional finance where the relationships are direct between the parties. It's true that Islamic finance, for an extent, is complex than conventional financing, because if you look at the modes of conventional financing, normally they will create a debtor-creditor relationship based on a loan transaction and charging of interest. But when it comes to Islamic finance, we have different types of relationship that we create with the customers. For instance, it could be less or lessee if we are using a ijara transaction, so on and so forth. So definitely it's complex, but it doesn't mean that Islamic finance is difficult to be performed. We do have everything structured now within the banking system, banking framework. If we take Malaysia as an example, we understand that within the Bank Negara's banking framework, we are doing Islamic banking and finance. It is not in isolation to that.
That's right, exactly. And thank you so much for that very clear explanation, particularly when it comes to the concept of riba, which may be quite misunderstood, even by perhaps even Muslim consumers themselves. But speaking about the fact that riba and so many other Islamic financial instruments, of course, they come from a very ethical basis. Let's perhaps discuss for a brief bit, Dr. Aisha, how has the more recent boycott, divest, and sanction, the BDS movement, in reaction to everything which is happening in Palestine and Gaza right now, how has it also increased vigilance on the composition of Sharia compliant financial instruments, ensuring that potential investments are, of course, going towards the betterment and not towards the detriment of anything occurring across the world, and, of course, in places which are inhabited by majority Muslim populations?
Definitely, the boycott movement that has happened in the world has actually proved that we are moving towards a much more ethical societies, whereby ethical considerations are given paramount consideration, because previously ethical considerations are kind of invisible to us. Now, if we look at Sharia screening criteria that are practiced in different parts of the world, most of the considerations are giving in ousting elements which are not Sharia compliant, and it includes some of the ethical considerations, but not to the extent where we are practicing it right now. So I believe that because of the boycott movement, we understood that reforms are required to Sharia screening as well, whereby a qualitative element apart from the quantitative elements we used needs to be inserted. I think Malaysian Securities Commission's Sharia screening criteria is one of the good example to illustrate it, whereby they don't only have the quantitative elements embedded in it, but there is an element of qualitative component in it, whereby the freedom is given when the Sharia screening is done of companies to consider these types of unethical elements. If there are unethical elements, they can oust the company from being Sharia compliant. So I think what it has taught us is that time has come to actually show to the world that whatever Sharia compliant is automatically ethically compliant as well. Because there's no need to have two different types of screening criteria. We can embed that in one, and in future, hopefully these types of reforms we will see in Islamic finance, including specifically the Sharia screening criteria we are using around the world.
Absolutely. I think you make a great point there, Dr. Aishath. But of course, speaking about ethics and speaking about finance, that also makes me think about the much broader picture of what has become very much a catchphrase, especially since the pandemic, everything to do with ESG. Would you also say that there is great opportunity for Malaysia in particular to perhaps harmonize Sharia compliant financial products and instruments with the broader picture of ESG and ESG related investments, which are the next and continuing big thing?
Yes, definitely. I think Malaysia has achieved a lot when it comes to adopting ESG into Islamic banking and finance framework. Now, if we look at before pandemic, of course, people were more concerned about the commercial financial activities. But after COVID-19, we have realized that the world poverty clock has gone back to more than 30 years, making it a collective as well as individual responsibility to help those who are in need. And suddenly we understood that together collectively we have to work to eliminate poverty in this world, especially finding solutions to uplift those who are unserved and underserved in the communities. And if we look at the Malaysian frameworks we have, for example, the SRI framework issued by the Securities Commission Malaysia shows that how ethical Sharia compliant instrument can be issued, which will help not only the issuer to achieve their objectives, but also those who invest can have this assurance that whatever they are investing is ethically acceptable, and there is a societal impact which they are creating, which is a positive impact. And I think the latest version in this regard we can see is the Maqasid Sharia guidance, which is issued by the Securities Commission Malaysia, which talks about how we can actually adopt Maqasid Sharia, which aligns with SRI concept, ESG concept, and even UN SDGs into the capital market, which often we don't talk about. Because when it comes to capital markets, we always believe that that is for big corporations, for their liquidity management purposes, and for social purposes, it shouldn't be used, or it cannot be used because it is kind of incompatible. Why? Because from an immemorial time, we believe that capital market instruments have been used only for commercial viable purposes only. So I believe that a lot of things have changed after the pandemic, and it's actually for good it has changed. And today there are a lot of frameworks that can be leveraged to achieve these goals, and people have understood that it's not only for commercial gains we have to engage in financial activities, but also to help the unserved and underserved segments, we can use the existing frameworks.
Exactly. And speaking of the existing frameworks and the main economic financial benefits of Islamic banking, Dr. Aisha, do you believe the sector can sustain its high growth rates in the decades to come vis-a-vis traditional banking? How do you feel that balance is going to move ahead coming forward?
Of course, we have moved very much progressively. However, when it comes to progress, the definition needs to be changed. Do we want to grow in number or do we want to have quality products? I think the next type of growth we want to see in Islamic finance and banking industry is not achieving the numbers so much, but having quality products that can serve everyone. It should be universally served, meaning that we should have innovative products which are different from our conventional counterpart. Because from immemorial time, since the institutionalization of Islamic banking or finance that took place in 1963, starting from the Midqamr establishment in Egypt, we tend to say that we have to create a level playing field between conventional and Islamic finance. And we always compare apple to apple between conventional and Islamic finance, thinking that they are the same. But today, at this point, we realize that if conventional finance is as an apple, then Islamic finance is orange. It cannot be compared same to same at same level because the way how it operates, the framework in which it is shaped is totally different. And I think, therefore, the future growth of Islamic banking and finance wouldn't be so much, we wouldn't be focusing on numbers, but we would be focusing on impact. What are we achieving? Are we alleviating poverty? Are we helping those who are financially excluded in the society? Are we making a difference in the society? This is what we are looking for. So for me, growth is that if even if the numbers are growing, even if you're stagnant in numbers, it doesn't matter. Actually, the impact should be the way how we should measure the growth in future.
Dr. Aisha, so speaking about the potential of Islamic finance as a tool for poverty alleviation, enhancing social mobility, could you share with us a little bit more about the recent UNFP Malaysia launch of an Orange Perpetual Fund and the Work Kafala program, which aims to economically empower domestic violence survivors? Now, this is an extremely innovative approach. What does it actually entail?
So, as you know, when we talk about financially excluded population in countries, normally we just believe that they belong to the category of B40, and we don't segment is them into categories. So, because of that, I believe that it's very important to see those who are financially excluded in the societies in a way where they are socio-economically in a disadvantageous position because of a circumstance which they had to face in once upon a time in their life. Therefore, with UNFPA, we try to find out what could be done to help one of these segments, which is the domestic violence survivors, to financially and economically empower them so that they could do something on their own and it doesn't become a burden to the society in which they live. So for that, we started collecting information and we found out that there are two ways in which we could help them. One is making them economically and financially empowered through finding them job opportunities or engaging them in entrepreneurship activities. If we look at domestic violence survivors, we believe that there could be those who are educated enough to get a 9 to 5 job. But as you know, because of their circumstance, they might need a safe environment. They might not be able to go anywhere and do the work. So we have to find a safe environment for them to go and work and earn. Likewise, there could be people who had a dream. They wanted to start a business, but because of that circumstance, they sacrificed it and now they want to resume it, but they don't know how to do that. So for these people, again, we need to provide a helping hand and we need to give proper training, proper even the funding required and guide them throughout their career to become an entrepreneur. And the third category is right now they have a business, but they want to expand it, and they don't have the means to do that. So again, they need a helping hand in this regard. So therefore, we formulated the work kafala program. So kafala basically in Arabic means guarantee or sponsorship, which means that we are going to help these domestic violence survivors who need these types of entrepreneurship opportunities or a job opportunity by providing them the environment, the means to do so. And we have collaborated with IRSIP, one of the Islamic Finance Specialized Institute under University Islam Selangor, to do this. And the second initiative in this regard, which we have formulated, is the Orange Perpetual Fund Initiative. So we found out that normally we focus so much on the survivors of domestic violence that we neglect their children. There aren't much opportunities available for their children to get educational opportunities, especially when they want to go for higher education. They have these funding constraints which they face. And because of that, they tend to sacrifice their education and do something else. So we thought if we can come up with this Orange Perpetual Fund, definitely the children of the domestic violence survivors can become educated, and they will be helping their family to economically and financially become empowered.
Absolutely, helping to really reduce life cycle impacts of domestic violence. Now, definitely initiatives like this should be something which can be further promoted. Thanks for the conversation so far, Dr. Aisha. We take a quick break. We'll be back right after. Don't go anywhere. You're watching Niaga Spotlight. Welcome back to Niaga Spotlight. You're still with me, Tamina Kausji, and today, of course, we're discussing Islamic finance and economics with Prof Dr Aishath Muneeza from INCEIF University. So, Dr. Aishath, since its establishment in 2005, INCEIF has also become one of the world's leading academic institutions on Islamic finance. Tell us about the journey so far and any plans for the near future.
Yes, the INCEIF University has been established with the intention of creating the global talent pool required for the Islamic finance industry at a time where not so much prominence was given to Islamic finance education. So I believe that through INCEIF University today, we have created the global talent pool required for the Islamic finance industry. And since then, a lot of things have changed. More educational institutions have entered into the market, whereby they offer similar courses, and more talent pool are developed because of that. As for INCEIF University, now we focus more on not only education, but also creating a quality talent pool required for the industry by offering diversified courses, specifically on those areas where more attention is required. So one of the new courses that we have introduced in the past few years is action-based learning, whereby the confidence to the students is given before they even go out of the university, that they are able to implement what they have learned inside the classroom by engaging in industry players who wants them to do a consultancy project, which should be finished within one semester and assessed by not only internal mentors, but outside mentors as well to get a good grading. So with these types of initiatives, I believe that the students not only know that whatever they have memorized can be there in the brain, but they also know how to practically implement that. At the same time, they can develop their soft skills as well.
Dr. Aisha, so that does sound like a very holistic way to move forward with educating the future workforce for Islamic finance. Moving along from there, any thoughts on the fact that in 2023, Malaysia was the largest sovereign issuer of sukuk, reinforcing, of course, our role as leading global players in Islamic finance? How can Malaysia perhaps leverage further on its position to not only cement its role as a global leader, but also assist other countries in expanding the global Islamic market? Taking from this.
I believe that there's a lot of potential for that. Time has come to show how Islamic social finance can be integrated to sukuk market as well. If you look at Indonesia, for instance, the government has come up with the cashback of linked sukuk, where even Islamic Development Bank has recognized as a very innovative way of raising financing. So I think time has come to show more types of innovative instruments that could be issued through the country to show the world that these are the things which are doable. So some of them include, for instance, going into issuing of blue sukuks, or even orange sukuks for that matter. And in the realm of Islamic capital markets, recently our Prime Minister has announced that a social exchange will be soon created by the Securities Commission Malaysia, showing to the world that even Islamic social finance can be integrated to the capital markets, again, showing that Malaysia is still relevant to the industry and it is still the leader.
Absolutely. So that would, of course, be one of the primary drivers, which is actually showing us that the expansion of the Islamic finance ecosystem is really well on its way. I'll also just quickly highlight the fact that just last week, Aon Bank also officially launched the country's first Sharia-compliant digital bank. Dr. Aisha, this has been a most informative segment. Thank you so very much for taking time to join us.
Thank you very much. It's my pleasure.
Well, that's all we have time for today on Niaga Spotlight with me, Tamina Kauschi. We'll see you next Friday with more business analysis and insights. Here's to a productive week ahead.